Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Thank you for coming back for another day of Tesla analysis. Today, as usual, we will go through the stock price analysis. At the end of the trading day today, Tesla ended at $793.61, up over 1% from yesterday. There was a spike in the middle of the day and then a sell-off toward the end of the day. So let's take a look at the price action to see what that means for the stock price tomorrow and next week, or the next few weeks for that matter. I will also want to go over with you what I saw on the recent GM infographic presentation to its shareholders. I want to share with you what I think GM is aspired to become. The keyword here is aspired to become, because I don't think that they could easily get there, and their premise is also flawed in a lot of different ways. So I'll share with you my thought on that. So stay tuned for the full analysis today. If you are new to my channel, please consider subscribing. I am a growth stock investor and a trader, and I'd love to share with you my investing and trading journeys. Let's get right into it. So this event took place yesterday, GM Investor Event, October 2021. So let's kind of go over some of the key details here on this beautiful infographic presentation by GM. So GM annual revenues is expected to double by 2030. The CAGR is expected to grow at 50%. CAGR is compound annual growth rate. So it's pretty impressive through 2030, largely with recurring revenue. EV revenues projected to grow 40 to 50% by 2030 as well. New margin is expected to grow from 12 to 14% by 2030. Core auto business margins expand as EV scale and battery costs decline. We can see that they also have planned for 60% battery cost reduction, an addition of 4 plants to produce battery with capacity up to 140 gigawatt hour, 30 plus new EV models to be launched globally by 2025. So I have a lot to say about this particular area here. I think that with an aggressive plan to reduce battery costs by 60%, you need to have battery technology, something that Tesla has been researching and implementing for years, and Tesla had its battery day last September. GM is now looking to build 4 battery manufacturing facilities and aiming to reduce battery costs up to 60%. Based on what? What is the technology? And this is by what year? 2025? That's 4 years away. We're not going to be able to see any meaningful reduction in battery costs until the technology is complete and scale up with production and continue to be evolved and improved in order to reduce costs. So it's sort of the chicken and the egg. The more vehicles you sell, the more revenue and margin you have to be able to research and expand your battery technology. But GM is not selling anything of meaningful quantity right now. So how is it going to be able to reduce battery costs? Especially, I have not heard of any battery technology that GM has, right? GM even made mistakes of partnering with bad businesses like the Trevor Milton of the world. So I'm a little perplexed as to its plan to reduce battery costs by 60%, unless it wants to buy directly from Tesla, and if Tesla has extra capacity to offer. Otherwise, I don't see how that is possible. I also see that GM, this part really bothers me. GM is saying that between 10 to 15 billion dollars would be capital projected spending avoidance by 2030 by converting versus building all new factories. So what it is saying is that it would retrofit a pre-existing building into the building with the capacity to manufacture EVs, as opposed to conducting greenfield operations, building everything from the ground up like Tesla. I have a little bit of experience with this, and I could tell you that greenfield operations with the right capital investment, with the right technology, is by far the best formula for success. It's one thing is you buy a pre-existing empty building and retrofit it into a manufacturing facility that can run EV. Quite another is that you retrofit your own ICE manufacturing facility into an EV manufacturing facility. It's very difficult. It's two different types of technology, two different types of machinery and equipment. For example, to build a plant, you have to look at piping, you have to look at electrical installation, you have to look at the foundation on which to lay your machines. The type of foundation depends on the weight of the machines. So it's not as easy as, let me just take this building, rip all the machinery equipment, throw it out, and put in new EV equipment. You literally have to dig up the plant, to revamp the foundation, to revamp the electrical infrastructure, to repipe the facility, and the entire facility has to be ripped out and rebuilt. It will end up cost you more money than if you were to do a greenfield operation from the ground up. So this alone tells me two things. Number one is that GM has no idea what it takes to run an efficient manufacturing facility. And number two, it cannot possibly produce at a wholesale mass production level to match with Tesla. On top of that, let's not forget, it wants to produce 30 plus new EV models by 2025. That's 4 years from now. You want what now? 30 models? Did you know that Tesla has about 6 models very efficiently run and is still not meeting demand? You have 30 models? In your crippled retrofit facilities, you expect to scale up in 4 years. I don't think that's going to happen. That's just my personal opinion. So overall, I think GM is aspired to do good things for the business, and I admire that. I think the vision is misguided, and I don't think that it could easily execute and perform what is set out to do. Of course, as I was editing the video, Tesla has announced that it would be moving its corporate headquarters from California to Texas, and particularly Austin. It is not a huge surprise to me, but it is still very good to hear the confirmation. As I shared with you guys a couple of months ago, I visited Austin. I drove by the Tesla Gigafactory and I saw what appeared to be a very nice facade for corporate headquarters. You would not need that kind of facade for a gigafactory. At the time, I know that when Tesla hired corporate employees, including folks in finance or legal, they had the option to go to either the Austin office or the California office. And so it gave us a little bit of a hint. Texas could become a headquarter and has become bigger and bigger. Elon Musk himself also moved to Austin a couple of years ago. The last quarterly earning call was also conducted out of the Austin, Texas facility. So there were a lot of writing on the wall that we can tell that Tesla would be eventually moving to Texas. I also think when you have a greenfield operation and you buy land to be able to build from the ground up, you need a lot of support from local governments and residents. First of all, it's the permitting process. If a local government does not want you to be there, they will drag their feet. They will not give you the right approval. They will also tax you by value of your building. Property tax could be a pain for Tesla over the long term without the cooperation of government agencies. So I am beyond excited that Tesla moves its headquarters to Austin, Texas. So here's the chart analysis for Tesla today. We will start with the daily chart as usual. Here is the candle for the daily chart. You can see that 793 remains to be a strong support and resistance for Tesla at this point. The 50-day SMA is actually higher. It is now adjusted to $731, and the 200-day SMA is at 702. The volume today is at 103%, which is right around average or slightly above average. And I think that is attributable to the price action toward the back half of the day when traders and shareholders are excited about the annual shareholders event that will be taking place later on today. Let's take a look at the hourly chart here. As you can see here on the hourly chart, Tesla had a very boring day today, nothing much going on, and then at around 2 p.m. Eastern Standard Time, there was huge volume coming in to buy Tesla. and that lasted for about an hour. The last hour of the day, Tesla sold off and retraced back to previous support at 793. Now, based on these 2 hourly candle alone, it is not reversal, which means that tomorrow the breakout could continue. Usually you can see a 3 candle pattern where you have a big engulfing for the first candle and then retracement of the second candle and then continue to spike higher on the third or the fourth candle. This one it's a little bit harder to say that is a continuation because the sell-off is a little steep and it goes all the way down to more than half of the previous hour's candle. However, it is not a complete reversal, and if we are looking at a 4-hour chart, it is still a relatively okay and bullish candle compared to the past candles, although there is a little bit of a rejection up top. Now, if Tesla ended the day at, say, 788 or something like that, that would have been reversal, right? So we have a little bit of room here to hope that Tesla could continue this run tomorrow. On the other hand, we have to note that with all events, good or bad news coming out of Tesla will cause the stock to sell off. So even if we have really good news coming out of the annual shareholder meeting today, it could likely sell off tomorrow. Let's go to the weekly chart really quick here. Once again, the weekly bull flag is still intact with the weekly candle here. It is sort of a continuation, but it could also be a dark cloud cover if we're not careful. So a dark cloud cover appears when the second candle surpassed the highest point of the previous candle and then retrace back over half of the previous candle. So if you're just looking at the range of the candles, then it does look like a dark cloud cover. But if you're looking at the beginning and ending points of each candle here, then it's not a dark cloud cover. So it is up to each person's interpretation. I don't think that Tesla is immediately bearish. I don't think it's doom and gloom based on this weekly candle. But I can't say that it's super bullish either. One good thing about this weekly candle, and I know we still have another day to go in this week, but the good thing about this weekly candle is that it is above my resistance at 777, and it tends to spike up higher, and it wants to spike higher. So if it has the right catalyst, it could easily get to 824. And if it does get to 824 tomorrow and retrace a little bit, then it is a bullish engulfing candle and not a dark cloud cover. So that is something to pay attention to. The price action tomorrow could decide what the price action for next week would be. The last quarterly result was announced on the last Monday of July, and that was July 26th. So I would venture to say that in October for Q3, the quarterly earnings would likely be announced on October 25th, which is on a Monday. Today is October the 7th and tomorrow is October 8th. We have 2 full weeks leading up to October 25th, which could be the weeks that Tesla would be running, and I would say that October 18 would be a good week to anticipate a good run in Tesla. Another note of caution for the bulls is that for the last 2 weeks, we see a lot of long wicks on the upper end, which means that Tesla started to spike up and get rejected. So at least we can see 1, 2, 3, 4, 5, 6, 7 candles within the last 9 days where Tesla get rejected up top, and it always tend to move back down to 793. So now 793 is a very strong resistance and support at this point, and if Tesla ends the week tomorrow above 793, then I would venture to say that next week would be a good opportunity for the bulls, and it could even break out sooner, and hopefully it will break out for 2 consecutive weeks leading into earnings.